And welcome back. The madness continues as Redfin reported today that the average home buyer's mortgage payment surged to a new record high as rates and home prices increase once again. Also, we're still seeing a drop of home buyers and home sellers as pending home sales and new listings fell in each of the 50 most populous metros in the US. This is based on a brand new report from Redfin, and in today's video, I'm going to share all the details. And before we get started, if you guys are looking for a real estate agent referral, check out that link in the video description below or go to homeandmoney.com/Jason to get started today. And with that said, let's begin today's video. I have a lot to share. So here's Redfin's report that was just announced today, which is May 11th. This is actually covering the 4 weeks ended May 7th this year. So one of the first things I want to talk about is home prices, because they say here the median home sale price in the US increased to $370,625, down 2.7% compared to 1 year ago. That's the 11th straight 4-week period of decreases, asterisks, year over year. So this is the 11th consecutive week in which home prices are down compared to the same time frame 1 year ago. I say this because I think there's just a misconception that home prices are going down because rates are so high right now. And of course, home prices are so much higher compared to the past couple of years. In actuality though, when looking at the median sold price right now compared to the beginning of March or beginning of February, I should say, home prices are up by about 8%. And here's a chart showing just that. An increase in home prices ever since the 4 weeks ended February 19th to be exact. Home prices increasing every single week ever since then. We're still below levels compared to 2022, down by about 3%. But that 3% decrease compared to 2022's numbers has plateaued over the past 2 months. In other words, over the past 2 months, the difference between this year compared to last year hasn't grown. In fact, it has been plateaued at a decrease of 2%. All right, so getting back to Redfin's report here, of course, real estate is local. It depends on the area though, right? So when looking at prices down compared to 1 year ago, 30 of the 50 most populous metros are down compared to 2022's levels. So 30 of the 50 most populous metros, so that means that approximately 60% of the 50 biggest cities are down compared to 1 year ago. Austin, Texas led the nation, a decrease of 17.7% year over year. That was followed by Oakland, California, down by 15.7%, San Francisco down by 11.9%, Las Vegas down by 10.7%, and San Jose, California, just south of San Francisco, a decrease of 9.7%. And by the way, that's the biggest drop year over year, going back to at least 2015 for Austin, Texas. In contrast, home prices actually increased the most in Fort Lauderdale, Florida, a gain of 10.6%, Milwaukee, Wisconsin, a gain of 6.9%, Cleveland, Ohio, a gain of 6%, Indianapolis, Indiana, a gain of 5.7%, and Providence, Rhode Island saw a gain of 5.3%. So it's interesting to see here that out of the 50 most populous metros, there's only one metro that had double-digit increases year over year. Every single other metro here that did report a gain saw a gain in the single digits. And of course, I mentioned that because 1 year ago, this report here stated that every single metro had increases compared to 1 year ago, and the vast majority were up by double digits. Meanwhile, the median asking price home in the US increased to approximately $400,000. That's roughly flat compared to a year ago, only a gain of 0.5% for asking prices in the US. Now, here's the big kicker here, because the monthly average mortgage payment based on the median asking price home based on current rates today increased to an all-time record high of $2,566 per month at the 6.35% mortgage rate, which is the current weekly average. By the way, this number here will actually look worse though when looking at daily rates. So for example, when looking at the Mortgage News Daily as of today, which again is the 11th. Average rates are at 6.49%. But in any case, an all-time record high based at 6.35%, not too much far off the daily rate today. And that's an increase of 9.7% from a year ago, a gain of $226 more per month to buy that same house today compared to 1 year ago. And here's a graphic showing just that. This orange line right here is your average monthly housing payment this year. Here's 2022. In blue is 2021. 2020 is in gray at the bottom here. So an all-time record high as far back as our data goes, which I think is 2015. But $2,566 per month, much higher compared to 2022 this time, when the average monthly housing payment was approximately $2,300 per month. Also, this is pretty eye-opening here because during the same time frame in 2021, your average monthly housing payment was approximately $1,600 compared to $2,566 per month as of today. And by my dumb math, that's an increase of 60% to buy a median price home today compared to the same time frame in 2021, which is absolutely insane and not sustainable. Also, like I mentioned at the beginning of this video here, we're seeing a lack of new listings as well as pending home sales as well. So pending home sales fell by 15.8% year over year. They fell in each of the 50 most populous metros as well. They also dropped the most in Las Vegas, down by 38.7% year over year. Seattle, Washington saw a decrease of 37.6%. Chicago decreased by 34.4%. Oakland, California saw a decrease of 33.9%. And Sacramento, California fell by 32.9%. In regards to new listings, again, every single metro had a decrease year over year regarding new listings. And they actually fell the most in Riverside, California, down by 48.7%. Anaheim, California, and the Los Angeles area fell by 48.6%. Los Angeles fell by 40.6% as well, or not as well, down by 40.6% compared to Anaheim, down by 48.6%. San Diego fell by 39%, and Las Vegas saw a decrease of 38.6% in the number of new listings compared to 1 year ago. So here's a look at pendings over the past several years. Again, here's 2023 in orange, the red line's 2022, the blue line's 2021, and the gray line right here, which I'm more or less ignoring because that was more impacted regarding COVID lockdowns than anything else here. So when looking at these levels right here, we're seeing a seasonal uptick in contracts being signed, just like we do every single year, except for 2020, of course. But we're still down by about 15.8% year over year, also below levels in 2021 as well. So in other words, we're seeing a seasonal uptick in demand, but not nearly at the same levels over the past several years. And also, as I mentioned, new listings decreased by about 19% year over year, also below levels compared to 2021 as well, because back in 2021 and 2022, during this time, there was around 115,000 new listings. Now there's just over 90,000 over the past 4 weeks. This accumulative effect regarding a lack of new listings compared to the same time frame in 2022 is having the impacts regarding historically low levels of active listings. In other words, the number of houses for sale has been directly impacted regarding the number or lack of new listings hitting the market. So according to Redfin here, active listings, which of course is the number of houses listed for sale at any point of time, was up by 3.6%, the smallest increase since June. However, though, active listings fell about 1% from 1 month ago, which is entirely abnormal because during this time frame, active listings, or the number of houses for sale, tends to increase. And here's a chart showing just that. The number of houses for sale has been decreasing ever since February this year. Right here, this is abnormal to say the least because inventory levels should be increasing starting in March. So for example, in March, inventory levels started to increase back in 2022 in March, I should say, until they peaked in August. In 2021, active listings started to increase in March as well, and they also peaked back in August 2021. In contrast, this is entirely different compared to what's happening this year, where inventory levels are going down more or less every single week. One thing I do want to mention regarding the inventory levels reported by Redfin, if you guys follow the channel, you guys know I talk about inventory up by about 50% from 2022, according to altosresearch.com as well as realtor.com. Also, in comparing to pre-COVID levels in 2019, for example, this time, we're down by about 50%. So even though inventory is up by about 50% compared to 2022, we're still down by about 50% compared to 2019. But for whatever reason, inventory levels, according to Redfin, are a little bit different here because they're reporting here only an increase of 3.6% compared to the same time frame last year. It's hard to know who to believe, whether it's Realtor.com, Altos, or Redfin, but I'm guessing because Realtor.com and Altos tend to be somewhat similar, approximately 420,000 houses for sale, whereas Redfin's reporting 712,000 houses for sale. I'm guessing this number right here probably includes some pending home sales given the discrepancies of these other two companies. But it's only a guess. If you guys know, please leave me a comment below. One thing these three companies do agree on though is that inventory levels have been on a downward trend this year. Speaking of a downward trend, here's the month supply in the US right now. The month supply, according to Redfin, is at 2.6 months. 1 year ago, it was at 1.9 months. It also has been decreasing ever since February this year, when the month supply was 4.5 months. It is normal to see a decrease in the spring months, but not this sharp decrease like we've been seeing this year. Now here's a wild chart showing the percentage of pending home sales in which the seller accepted an offer within the first 2 weeks of the house being listed for sale. So for the 4 weeks ended May 7th, I believe, or is it May 7th? May 7th. The percentage of contracts being signed within the first 2 weeks was at 48%, which is absolutely insane because back in 2021 and 2022, that percentage was only 50%. So we're not too much far off 2022 as well as 2021's levels. I'm guessing the reason for this is the lack of houses for sale, because if a house is priced right, in general, across the United States on average, houses are still selling fairly quickly, especially compared to pre-COVID levels. So I'm guessing this percentage here is not too much far off last year's levels as well as 2021, because there's a decrease of buyers, but there's also a decrease of new listings as well, causing housing inventory to be at historically low levels. And speaking of houses selling fairly quickly, the median days in the market has decreased now to 32 days. This is a time frame when a home seller lists their house for sale until when they accept an offer from a home buyer. That's 32 days on average in the US. Compare this to February though, days in the market was just over 50 days. Now it has decreased to 32 days. Now, having said that, even though days in the market has been decreasing like it does every single year here, at 32 days, this is much higher compared to last year, when days in the market was approximately 18 days. Redfin also reported that approximately 32% of houses that sold over the previous 4-week period here sold above the seller's final list price. So approximately 32% of houses that sold over the seller's final list price. In contrast, this means that approximately 68% sold at or below the seller's final list price. So in other words, home sellers on average are selling their houses for at or below their asking price. Or to be exact, approximately 0.6% below their final list price, which is obviously much lower than 2021 at this time, when the ratio was 101%, meaning houses selling for about 1% over. And going back to 2022, the ratio peaked at 102.5%. Houses on average selling for about 2.5% over 1 year ago. Now they're selling for about 0.6% below asking. And with that said, check out that link below if you guys want a real estate agent referral. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you. Also consider subscribing as well, of course, as well. Hope you guys have an awesome day. I look forward to seeing you on the next video.